So we're still in this pre-engagement activity situation, and there's something called an engagement letter. We're going to break down the engagement letter into 4 different parts and really understand who sends it, who receives it. So who sends this letter? Is it the audit firm or the client? So it is prepared by the audit firm. And what is it? Well, it's basically an agreement between the potential client and the audit firm, but it's prepared by the audit firm. So when a new client is accepted, or even when the engagement continues, the engagement letter must be prepared. So the audit firm prepares an engagement letter every single year. If it's this year's engagement letter, it goes in the current file. We'll learn about the permanent file later, but if it's over like previous year's engagement letters, will be in the permanent file. So the first section is the scope and the objective of the audit. The second section is going to be the auditor's responsibilities. Third section, management's responsibilities. See where we're going here? And then there's going to be a section for any inherent limitations for the audit, right? And I think that's going to include any internal control considerations, et cetera. I think there's an example on page 81 of your book, if that's the current book, because every year it's going to have the scope of the audit, right? That's one of the sections. So one of the things you never want to do as an auditor is assume that the scope is going to be the same every year, because the risks aren't going to be the same every year. The internal controls, you can't assume are the same every year. So yes, they have to, even if they're going to be with this client for 20 years, every year, before the audit can start, there has to be an agreement about what the audit's going to be about. Remember, the PCAOB inspections were the ones where if the audit firm audits more than 100 clients per year, then they have to be inspected every year, versus if they audit under 100 publicly traded companies, then every 3 years. We're talking about the audit itself. So we're talking about the firm, not the PCAOB, but the firm going to a client. Every year they have new financial statements, right? So yes, every year there's going to be an engagement letter. I said we're going to talk about the termination letter. We're also going to talk about it at the very end of this class, but not this class, but the course. Well, let's talk about it here too. So the termination letter is basically a letter that the auditor gives to the client that tells them about how any future dealings might happen. So let's imagine that PwC can't be or wants to end the relationship with Target, right? They could give them a termination letter that says something to the effect of, hey, if there are any restatements that has to happen down the line because of something we audited, this is what the fee schedule would look like, or this is how we're going to handle it, or this, whether or not we're going to give approval for the previous or the next auditor to have access to our working papers. Is this letter required? When a auditing firm leaves a client, do they have to send a termination letter to the client? They do not. They're not required to do that. And so who sends it? The leaving audit firm sends it to the management team of the client. It's like best practice, especially when we're talking about the big four in a sense, because typically their clients tend to go from one big four firm to another. So it's kind of common courtesy to be like, hey. So what were those 4 objectives of the engagement letter? Were those 4 sections? Scope and objective. That's going to tell you what the audit's going to be about. Hey, we're going to audit the financial statements for this year, fiscal year ending December 31st, 2021. What was the second section? The auditor's responsibilities. It can be in a different order. What are the auditor's responsibilities? I mentioned them last week briefly, but it just reminded me. So yes, because why are they corroborating management's assertions? Because they have to do something with those, right? They need to collect evidence over management's assertions so that they can form an opinion. So that's what the auditor is responsible for. They're responsible for forming an opinion on 2 things. One of them, anybody want to guess? Materiality of. One opinion they have to do is they have to give an opinion over the financial statements, is whether or not they're materially or misstated, right? Whether or not they're in conformance with GAAP materially. Very good. Anybody know what the second thing is they give an opinion on? If it's part of the financial statements, it would still go under here. I'll give you a hint. It has to do with, let's come back to it. The next section or next part of the engagement letter was management's responsibilities, right? What is management responsible for? So they are responsible for the financial statements, the preparation, their presentation, all that good stuff. What else are they responsible for? Internal controls. Very good. Guess what? Auditors have to give an opinion on the financial statements, and they give an opinion on the effectiveness of the entity's internal controls. Effectiveness of the entity's internal controls over financial reporting. I had to write it all out. So the auditor gives two opinions. We're going to learn about what's called an integrated audit report later on in the class. But they give an opinion over whether or not the financial statements are free from material misstatements, and they give an opinion over the effectiveness of the entity's internal controls over financial reporting. So the termination letter, again, that letter was just a document that the auditor can send to the client to kind of detail whether or not they're going to give access to their audit documentation to the new auditors, what would happen or how they handle any reissuance of any reports, what would be the fees for that or any future services. And it might contain information about why they left. Again, this is not required, but who sends this letter and who receives it? Who sends the letter and who receives this letter? The auditor, right? The audit firm, and management or the client receives it. Very good. All right.